Hi, I'm Michelle Gargar, and today I wish to share with you some tips and traps on what structure should you use for setting up your business. Now, a lot of people come and ask us, can you set me up a company? And when we sit down and talk with them, we find out not necessarily a company is the best structure for them. So quickly, what is a company? A company is a legal body that has shareholders and directors, so in other words, someone who owns it and someone who controls it. A company has to lodge an independent tax return every year and an independent annual return with ASIC. Basically, companies have sets of rules with the taxation department and ASIC, and they have to abide by those rules. Now, the big problems with companies is how do I actually get my money out of my company? While I can trade and earn revenue and earn profit, I pay 30% income tax on that profit, soon to be 29%. Basically, when I try to take that money out of that company, I impose with some restrictions. Yes, I can pay dividends out, and yes, I can pay wages out to myself. When I want to take out excess monies, i.e. monies I might need for extra things in my life, in general life, then it becomes a bit of a problem. And one of those areas is in the areas of loaning money to yourself. The tax office are not happy with that, and they're cracking down on some of these rules and regulations. Also, when you sell your business out of your company, trying to get your money out in a tax-effective way can be difficult. So what are the other options you can use? You can look at a trust structure, what we call a discretionary trust. Now, a discretionary trust has people called trustees and beneficiaries. Trusts have much more flexibility when it comes to distributing profits out. You can take monies out and pay it to yourselves as a distribution. Yes, you pay taxes on those, but you can share that profit around family groups. Also, the flexibility of when you come to sell the business. You can also get out the capital gains of that business in a much more tax-effective way. The last option is a partnership. Now, a partnership can be between 2 people, 3 people, 4 people perhaps. It can also be between a partnership of trusts. Now, partnerships also have their own sets of rules and their own sets of regulations. The problem with partnerships is they are limited to who is a partner and how you can distribute that profits out. Overall, when you're seeking advice on, you're seeking how should I set this entity up or how should I set this business up, it's best for you to come and speak to an advisor. And we can set out all the good points and the bad points of each of the entity structures and what's going to work best for you.